The hottest area right now is doing public company pipes for buying Bitcoin. We actually enabled a Bitcoin reserve in Pakistan, and this announcement came out in Vegas last week, and it's huge, right?
Muneeb Ali is the founder of Stacks.
Stacks is a Bitcoin layer 2 turning BTC into programmable money, with over $500 million already locked.
Is it cannibalistic to the L2 market? With the Bitcoin mainnet, you can't really build on top of it, so it needs to exist, whereas with Ethereum, it could.
Ethereum is programmable, Ethereum has lending markets, Ethereum is doing similar things, and the L2s are doing the exact same thing, right? So of course they're going to compete. Bitcoin doesn't have lending markets, Bitcoin doesn't have smart contracts. Bitcoin is not competing with its L2s. And Bitcoin actually needs these L2s for scalability, and these L2s make Bitcoin more valuable.
Today's guest is Muneeb Ali, the founder of Stacks. Stacks is a Bitcoin layer 2 blockchain focused on scaling and programming BTC, or Bitcoin as we like to call it. It went live in 2021 and has since grown to be one of the largest Bitcoin L2s in the space and has recently released a new roadmap to accelerate its mission. I'm excited to have Muneeb on the show today to talk about this and more. Welcome.
Hey, thanks so much for having me.
Thanks for being here. I feel like it's been a long time coming. I see Stacks all over and, I see your name all over like crypto Twitter and everything. So it's good to get you here and be able to ask you questions directly.
Absolutely.
To start off, can you tell us a little bit about yourself and how you even got into this space?
Yeah, so I think I'm an engineer or a computer scientist by training. I did my PhD at Princeton, and towards the end of it is when I got introduced to Bitcoin. So the year is 2013. That makes me ancient. I've been in this industry for like 12 years now and have survived. And I feel like I was always attracted to Bitcoin like a lot more, even though from a technical background, like I have a background in distributed systems, the work that Vitalik was doing on Ethereum or later on Toli was doing on Solana, that's like more of my wheelhouse. So I feel like I've always been sort of obsessed with bringing programmability like Ethereum or Solana, but to BTC. And the only way to do that is with L2s, the layer 2s, because you can't change Bitcoin itself. Like I can't go and tell people, oh, let's add smart contracts to Bitcoin, right? Like no one is ever going to do that. So the only way to bring like Solana like speeds or programmability to BTC is to build a L2. And I think that's what Stacks ended up being.
Right. And it's because Bitcoin's main network is just like too slow and it would cost too much money, right?
Yeah, I mean, it's just not going to change because it's not that it's a bad thing that it's not going to change. I think Bitcoin is valuable because it's not going to change, right? So it's like that durable thing. Everyone knows that, they're not going to do anything experimental. They're very risk averse. So I give this example, like when I started in 2013, like literally 12 years ago, I can dust up a old software of Bitcoin from 2013, fire it up, and it will sync to the version of Bitcoin today and it will work.
That's crazy.
And
so it hasn't changed really, yeah.
Because it hasn't changed that much, right? And it's always backwards compatible. And that's the type of durability you want to have. Like imagine, now look at Ethereum. Not only that Ethereum went from proof of work to proof of stake, and they have done so many different changes, their state, like you can't even imagine pulling up a Ethereum client from 2016. That client wouldn't even know what this new thing is, right? So I think they're just two very different networks and very different assets. Bitcoin is about giving people this sort of like durable store of value, and institutions are realizing that. Whereas Ethereum and Solana and even Stacks, they are these programmable networks that have to upgrade, that have to change and adapt for the developers. And they can experiment a lot more. Like at the Stacks layer, we can be more experimental. That's right. Like we're not damaging the foundations of Bitcoin if something goes wrong on Stacks, right? So I think that's the sort of difference between these networks.
Yeah. Maybe taking a step back, why did you decide to create Stacks? What was the gap you were trying to fill at the time? Obviously, you talk about the Bitcoin network remaining the same for over a decade. And then there's like the need for L2s, right, to actually build on top of Bitcoin. But were there other L2s in the space back in 2021 around that time, or?
No, so I think the project basically, if you look at the origins of the project, so it goes back to my PhD thesis, which was summer of 2017. So I think it was one of the earliest like computer science PhD thesis on actual blockchains and how they scale. And one of the things that was like pretty clear to me at that time, doing some experimentation on Bitcoin and other networks, was that most of these networks would need L2s for scaling. And I think Toli actually is trying to prove something different, and I think I really respect that effort with Solana. They're trying to say that no, we'll scale everything on the L1, and I think it's a very, in a way, contrarian approach, and it's turning out very well as well, right? Like I really respect the work, but my thinking back then was that you would need L2s, and I think a lot of people sort of like saw that coming. That's why even for Ethereum, you've seen 80, 90 different L2 projects funded. Even for the Ethereum roadmap, for the longest time, they were sort of saying, L2s are the way to go. And when you apply the same theory on Bitcoin, I think it's a little bit different. Like I'm right now not fully sold that you need hundreds of L2s to actually scale. But I think on Bitcoin, we know that we need at least one L2, right? Because Bitcoin is never going to change, right? So you need at least one. And then it's a question of like how that L2 is going to scale. And I think there's a Solana approach, there's some other approaches. But for Bitcoin, I think it's very crystal clear that it's never going to be the L1. Like that, everyone has sort of agreed upon it and sort of moved on from that debate.
Right. You said you don't need hundreds of L2s. Is that applying to Ethereum? If that's what you're talking about?
Ethereum has like 80 plus different L2s and 20 plus big ones, right? Like these people have raised like hundreds of millions of dollars, and they have market caps. Like I think the last I checked, the ETH L2 market cap is like $70 billion. Like that's a pretty large number, right? So a lot of capital has gone into it. A lot of developers have gone. And these days, I think Base is probably getting a lot more traction because Coinbase. But most of the action in Ethereum, as far as I can tell, is on the L2s. Like that's where most of the users are, and most of the development is happening.
Right. Yeah. I mean, there's Base, there's Polygon, there's Arbitrum, there's Optimism. There's a ton that, I mean, I could talk about it this whole episode, and we've had some of them on. But I think something that I've seen too, and it's interesting you bring that up, is that a lot of the activity and transactions are happening on these Ethereum L2s just because of maybe a similar but different situation with the Ethereum mainnet. But then there's the conversation of is it cannibalistic to the L2 market? And do you feel the same way about Bitcoin or no? Because with the Bitcoin mainnet, like the actual main network, you can't really build on top of it. So it needs to exist. Whereas with Ethereum, it could.
That's a great question, right? And I think the answer there is that the relationship of Bitcoin L2s to Bitcoin is actually very different. And the reason for that is Bitcoin is very different. Like I think this is a point I cannot emphasize enough, like that people should understand, that just because both of these things are digital assets and they kind of like trade on the same exchanges, doesn't mean they're the same type of assets, right? Like it's like comparing like land in Manhattan to Google stock. Like land is just a different type of an asset, right? Like yes, you can go and buy it with money, but that doesn't mean that if you're buying Google stock, that stock is the same thing as the land, right? Like land, Bitcoin is just different. So that's why I think when Ethereum competes with the L2s, it's because like it's just an analogy. I'm not saying they're actually like stock, but it's kind of like two tech companies competing with each other. Of course, they want to compete. They provide similar functionality. Ethereum is programmable. Ethereum has lending markets. Ethereum is doing similar things, and the L2s are doing the exact same thing, right? So of course they're going to compete. Bitcoin is not. Bitcoin doesn't have lending markets. Bitcoin doesn't have, like all these smart contracts. Bitcoin is not competing with its L2s. And Bitcoin actually, in some ways, needs these L2s for scalability, for programmability, and these L2s make Bitcoin more valuable. ETH L2s are not making Ethereum more valuable. Like there are arguments around it, but generally, like, as you said, that they seem to be sucking out value out of Ethereum, or confusing the market, or taking some value out. Whereas if you look at Bitcoin, the strongest graph I think this cycle is the Bitcoin dominance chart. Like Bitcoin dominance is close to all-time high. It's at like 65, 66%. And it's dominance against the rest of the industry. And we have to keep in mind that the rest of the industry has seen like hundreds of new projects launch, right? So 5 years ago, there were far less projects. and Bitcoin dominance was lower. And now there are so many more projects building these L1s, L2s, whatever that is, and Bitcoin dominance is actually higher. And I think one of the things that we are sort of like very proud of is not only that we brought developers back to Bitcoin, so there's like active development, active investor capital coming in, but some of the biggest criticisms of Bitcoin was like, if you go back again last cycle, people were like, Bitcoin is just a pet rock, nobody uses anything, right? And now they can't say that, right? Because not only that there's Sacks, like we've inspired other L2s to come in, and you can now actually deploy Bitcoin into smart contracts on the L2s. There are NFTs, there are all these things. So I think some of the biggest criticisms of Bitcoin have been taken away because of the work we have done and because of the work other L2s have done.
Right. Yeah, I was going to talk to you about that because while you were talking about it being like a pet rock or something, I've definitely seen in different Bitcoin ecosystems that there is ability to like hold the asset and then also, earn yield on it or participate in the Bitcoin DeFi or BTCFi. I don't know how you say it out loud. I only type it economy. And so I'm curious your take on that. Do you see that as a valuable sector, or are you kind of against like BTCFi, DeFi, all of
No,
that?
it's extremely valuable. I think
Hmm.
it's actually one of the most valuable things, and here's a reason for it, right? So being in the Bitcoin space for a while, like to 12 years, I've seen the cycles. I've seen Bitcoin go from like $70 to like where it is, ups and downs, and I've seen people like blow up in the journey as well. And there is almost like now institutional memory in the Bitcoin community where everyone is realizing that selling your Bitcoin or somehow losing your Bitcoin is the worst thing you could ever do, right? So there's this very strong culture in Bitcoin, and I fully subscribe to it, right? So Bitcoin is almost like a savings technology. Even if you
Right.
earn profit somewhere, convert it to Bitcoin because it's the best savings technology, and you never sell your Bitcoin. But then what that was doing was people were sitting on, Bitcoin that's not earning them anything, but they still don't want to sell it, even at a 0% interest rate, even if it's a completely passive thing. They still don't want to sell it. And now with these L2s and programmability, for the first time, people can actually borrow against their Bitcoin. So instead of getting a tax hit, so let's say you've been holding for like 10 years, you have a massive capital gains tax if you sell your Bitcoin. Versus if you just lock it and borrow against it, you're just paying interest. And Bitcoin is appreciating so much that interest over time is going to look tiny. So I think that's one aspect. And the other is that if you can actually make Bitcoin productive, let's say you provide liquidity for some trading pool, or there are other ways of earning interest. I'll give you one example, right? So Stacks has Bitcoin yield. It's a very unique asset that when you lock up STX, you can get BTC as yield, right? So this is a thing that has very strong product market fit because everybody wants to earn Bitcoin. And we recently, when we launched our L2 Bitcoin asset, we were sort of like giving part of that yield to initial Bitcoin depositors so that they can come in and they can provide some capital, use the network, and get used to it. So even for like a 3% yield, we got $500 million in BTC extremely quickly, right? So we had caps. The last time our cap went up from 3,000 to 5,000 BTC. So that's from $300 million to $500 million roughly. And it was done in 2.5 hours. Right? $200 million of Bitcoin capital came in 2.5 hours because they want to get that 3% yield. Right. So this is how much in demand that product is, because these people, as I said, they've been sitting on their Bitcoin for a very, very long time. Of course, you have expenses, you want to, live a little, but they still don't want to sell their Bitcoin. And that's like the perfect thing for them where they can start earning some yield while taking less risk. Of course, there are risks for moving your Bitcoin into an L2. And I think that sort of ties into, you mentioned our roadmap. Like one of the biggest things on our roadmap is to reduce the risk for people moving their Bitcoin, right? If we can make it fully self-custodial, that just like you own your Bitcoin on the L1, you own your Bitcoin on the L2. There's no bridge in the middle. There's no custody risk, no signers, whatever. I think that's the real unlock. And we had a technical breakthrough about it that we were very excited about.
Hmm. What was the technical breakthrough? The yield?
Not the yield, right? So it's right now, if you move your Bitcoin, so there's a decentralized group of signers that you're sort of trusting in the middle. Then whenever I say, hey, I want to withdraw my L2 Bitcoin back to the L1, these signers are going to sign off and I'll get my Bitcoin back, right? People are using it, of course, like we got $500 million in there, but there's always that, back of your mind, hey, what if something goes wrong with the signer network? Even if they're not malicious, what if there's a code bug that, some sophisticated hacker sort of like exploits or so on. So I think it puts an upper limit, right, on how much Bitcoin can move in, because people are especially in Bitcoin, are risk averse, right? They might deploy 1-2% of their Bitcoin and be like, I want to use it, but they're not going to deploy a lot of it. And so we really worked hard on how do we reduce that risk so that holding your Bitcoin in L2 is basically the same thing as holding it on the L1. There's no signer network in the middle. And the security guarantee is actually so strong. Like I like to tell people this, that even if, God forbid, like Stacks L2 dies, something massively goes wrong with Stacks and it just stops working and it dies, it's like dead, you will still get your Bitcoin.
How will they get it back? Because it's a 1-to-1.
Yeah. So the way it works is the new system, you lock your Bitcoin in your own self-custody. Stacks detects that you have done that, and it gives you L2 Bitcoin in your own custody, right? So both assets are in your own custody. The L1 asset is on a time lock. So you have to renew the lock to keep the L2 asset. But if Stacks dies, you let it die, your L1 asset is going to unlock in your own wallet. And no one can take it away from you, right? So it's a pretty neat system. And then we can even do payments which are fully trustless, self-custodial, like Lightning, but we don't have any of the liquidity or other sort of like routing problems of Lightning. That means you can do Solana-like payments with Bitcoin that are fully self-custodial. I think even that is going to be a huge thing where these things are fast. If you want to do 10 cents, you can do 10 cents. If you want to do 100 million, you can do 100 million. Lightning can't support that, right? I can't do a 5 million payment to anybody on Lightning. Like Lightning is very sort of limited to who you're connected to, how much liquidity is there in the middle.
Right.
So I think that's going to actually unlock Bitcoin payments on a global scale, and that's again something we're very excited about.
Yeah, you're talking about Stacks SBTC, which is the token that represents Bitcoin in a 1-to-1 ratio.
Yeah.
And before we started recording, I looked up the total value locked for it, and it is over $525 million, which is a ton of money. And it went from 100 million at the beginning of the year, I believe, to now 525 million, which is, according to my simple math, a 5x increase. Why do you think that is? What has ramped it up in, let's say, the past 6 months to get to this point?
Yes, I think our ecosystem is sort of, if you look at our history, we sort of like take our time to build the right stuff the right way, right? And I think that's why we have a big brand name, and people sort of like always are looking to us as like, okay, if you have like 12 options, they would rather go to Stacks. Like that's the sort of reputation we have in the industry. So I think if people were looking for these yields, when our product launched, like everyone's like, okay, again, as I said, there's some trust required in the decentralized signer side right now. People are like, okay, we're going to come here and try this out and see. And the same thing with builders, right? Like you attract the best builders. Like there are really good applications that are already built, and it's a very organic system as well, right? Like people don't, because we have a track record, people don't feel like, hey, it's some new chain that just launched, that's just throwing a lot of incentives. Capital is going to come in and then go away, right? We have survived 2 bear markets already, right? We've done a lot with the relatively less sort of like initial capital raise, and people sort of like trust that, okay, if I come in and get involved with DeFi here, it's probably going to stick around, and especially with the roadmap, right? I can't emphasize how big the self-custodial part is going to be, because at that point, it's like like $500 million is a lot, but $500 million out of a $2.5 trillion asset is nothing. Like it's like not even a drop in the bucket. So even if you can move 1%, 2% of BTC and make it productive, like we're talking about tens of billions of dollars here.
Yeah, that's so true when you think about it in perspective of like how big the actual Bitcoin market cap is. And that's something I think about when it comes to institutions as well. Like even getting them to do like 0.1% of their massive portfolios is a huge amount of capital that could enter the space.
And that's
Right.
that's something that we actively got feedback from a lot of large institutions,
Mm-hmm.
and what they wanted was they were not comfortable moving their Bitcoin to this signer network. Uh, it was surprising to me because they didn't want to mingle their funds, their L1 BTC funds, with other people. They're like, we want to have our own segregated address where our funds don't touch anybody else's funds, and it's for various sort of like um,
Right.
reasons for fiduciary duty to the trust and so on. And I think it's important to give the market what it wants. So that's why we worked on this solution as well. A lot of it is not only driven by, like, of course, there's a grassroots thing in Bitcoin that, hey, I should own my own Bitcoin and run my own node and so on, but it's also driven by institutions. Institutions want this product, that I want to do self-custodial minting, and for them, self-custodial is through their custody provider. So they would go to Anchorage, they would go to Hex Trust or BitGo, wherever, and ask them to do minting from their account. But they want it to be in their account and not
Right.
anywhere
Not a
else.
pooled one.
And then they can deploy, right? So that, again, that's the big unlock. Like, uh, Stacks did a major upgrade. We worked on it for like 2 years. We were calling it the Nakamoto launch, and there was a lot of interest in the market. And these upgrades, we are calling them the Satoshi upgrades. So I think it's all about the Satoshi upgrades now, and we
Of
can't
course.
wait for that to be live.
Yeah. For Stacks SBTC with the total value locked, how much do you think it'll grow to by the end of the year? Do you think it'll hit $1 billion?
Probably, right? I think it would again depend on the launch of the self-custodial side of it. I think if self-custodial goes live, I expect billions of coming in just on that. It's because when people are doing the calculations, they're looking at the upside, so it matters how much yield they can get, but they're also looking at the risk. So if you massively reduce the risk, people would actually come in for very little upside as well. Like, there are
Hmm.
people, institutions that I've talked to, forget about 3%, they would move their Bitcoin for 50 basis points, right? If
That's
if
crazy.
if they're not thinking
I guess if it's such size, it does make a
yeah,
difference,
exactly. So
right?
there are
Yeah.
two sides of the equation, and if you massively reduce that risk side, I think that number goes up a lot.
And you think there's a lot of risk still today?
I mean, it's again, it's the state of the art. It's the best that we can do today. And of course, we've built up the best system in the most secure way. It's decentralized, it's open source. We've gone through security audits. We have some of the best security firms like Asymmetric. They're partners, and they're sort of like actively watching the code. We're doing the best that we can today as the state of the art. But to fundamentally just change the equation, it's like saying, yeah, we can build the best, signer network and make it as secure as possible, versus, wait, there is no signer network, right? There's no bridge, there's no signer network, there's nothing. It's self-custodial. And I think it just fundamentally just changes the game.
Yeah, for sure. I think while you're talking about this, I'm curious your thoughts on the state of the whole Bitcoin ecosystem. How has it grown over the years? Do you think it's at a point where we really will see an influx of people and institutions coming in and doing more with their Bitcoin? Or do you feel like we're still not at that tipping point?
No, I think we've crossed a tipping point for sure. It's basically, um, like, I'll give you a funny example, right? Like, it's a lot of the in these cycles, right? So I've seen these cycles. Like, during these cycles, most of the interesting stuff in a way is happening actually outside of Bitcoin, right? Like, when NFTs were sort of like a
Yeah, you had
thing.
ordinals, but
Yes, this time, I'm saying this time is
right.
different, right? This time is the first time like Bitcoin is at the forefront of like everything pretty much, right? And I saw this funny tweet where people were like, it's going to be so funny if it turns out that Bitcoin maxis were the most intelligent people alive, right? And that's like so
Right.
funny, because they were like, everyone's making fun of them throughout the years, that you guys don't have, the brain cells to understand any of the new complicated stuff and this and that, and all you do is like these, like, basically, like, groggy old men who were kind of like, I hate everything, I'm just going to do Bitcoin. And then it
Yeah.
turned out like that was actually the best strategy, because everything's coming to Bitcoin. And even if you look at in the funding market right now, like, that's an indicator of like what's the hottest area. The hottest area right now is doing public company pipes for buying Bitcoin. like there are 40 different companies launching, and they're
Like
raising
the
around
treasury strategy.
public treasuries
thing.
for Bitcoin, right? And that's where it's going. So I think I feel like we've already passed that tipping point in terms of how many institutions are there. The performance of the Bitcoin ETFs just dwarfs like everything else. And now there's a race on the not only the public company side, but this is something that I'm actually pretty proud of. Like, so me working with Bilal in Pakistan, we actually enabled a Bitcoin reserve at the state level in Pakistan. And this announcement came out in Vegas last week. And it's huge, right? Like, not only the US is doing it, like, Pakistan is a nuclear armed nation and one of the leading ones in the Muslim countries. And it says, like, we've got to have a Bitcoin reserve, right? So
Right.
it's happening at the state level, and it's happening only for Bitcoin, right? Like, when the technology like takes over, the market wants simplicity and they want durability, right? So if you look at the internet, the underlying networks are basically TCP/IP, and it's been there now for like decades and decades. I think Bitcoin is sort of like going to become that standard, and nobody wants to go against the standard, right? Like, everybody wants to plug into what the standard thing is, and that's why I think it has crossed a threshold level, and that's why we are laser focused on what's coming next. Like, you always want to be going where the puck is going. So if everyone is now holding Bitcoin, these public companies are holding Bitcoin, if we can offer them yield on their Bitcoin, I think that's going to be the next big
Yeah.
block. And I think we are probably the best position for it.
It's so interesting you say that though, because I feel like you said everyone kind of wants to go with the grain, or you said something different. But when I think about Bitcoin, like it really was going against the grain of everything for over a decade,
Yeah.
and now it's gaining this traction.
Yeah,
So
and
it's
I think it's also like that thing is more about competition from within the crypto industry. Like once
very competitive.
once like gold is established, it's very hard to flip gold by silver or anything else, right? Because gold is gold, and everyone sort of, it's like consensus. Everyone thinks it's valuable, so it's going to be valuable. It's very hard to flip it. And I think that's what's happening with Bitcoin. It was also always meant as a different technology, right? Like, it never tried being a programmable network or like some sort of a NFT platform. Like, I know you can do ordinals and you can do these things, but Bitcoin was never designed. Its primary function is just to be like a store of value and a very, very simple thing.
Right. Would you say you're a Bitcoin maxi or no?
It's very funny, right? Like, so you're doing something right when you offend people on both sides, right? So I offend
You didn't
Bitcoin
answer my
maxis,
question.
and
Yeah. Okay. Yeah.
I
So you
offend
are, but you also piss them
I
off.
call myself a Bitcoin like financial maxi. I believe in Bitcoin the asset like more than anything else, but I disagree with a lot of actual Bitcoin maxis on um, improving Bitcoin technology, dev ecosystem, building L2s, making Bitcoin productive. So I find more common ground with developers and engineers and the rest of crypto on
Yeah.
those aspects. But in terms of like the financial asset, like, I think I'm definitely a Bitcoin financial maxi. Like,
Yeah.
I treat that as a very different asset from anything else. And I am very maxi on that, right? Like, I'm all to the extreme.
I also just feel like Bitcoin maxi has gotten, unfortunately, such a negative connotation by certain behaviors in the community. Like you said, where you like piss off one side and then the other side is like with you. So I definitely can resonate with that too. But I also see value within like other chains and ecosystems on the innovation front with DeFi and everything. Kind of going back to like the L2 conversation we talked about earlier. When it
I've been
comes
earning
to,
brownie points in the maxi communities recently because of the
how so?
Pakistani reserve, out of the role I played in it. They like when you make contributions to Bitcoin, so
Okay.
they're softening up a little bit.
Yeah.
I mean,
Do you think there's too many strategic reserves being created for Bitcoin? Like, because I almost see it as like all these things are propping it up, but what if, like, what, they just never take the money out? Like, even with like, Michael Saylor's strategy, he was one of the first ones to do it. And then we hear, governments doing it, companies, these shell companies creating it just to like buy Bitcoin, right?
yeah.
Like,
So I think
there's a
there.
positive and then there's the other side.
Yeah, I'll separate it out a little bit. Like, I think if you go to the state level, then the model is actually very simple. Like, the countries that had large gold reserves were generally wealthier, and they could get, loans against it or raise debt or something, but they were definitely considered like better off. You would much rather have a gold reserve than not have a gold reserve. And I don't think they sell it. Like, if you look at the US gold reserve, I don't think they've ever really needed to sell gold out of it. But it's a very, very valuable asset to hold, and it backs
Right.
the financial system and even the dollar for the longest time until 72. So I think at the state level, I don't think these states would ever sell, or they would, maybe they're forced to sell in certain conditions, but anyone who wants to be sovereign and wants to be independent, they would buy and hold for as long as possible. On the company side, I think there will be certain, it depends on the structure of the company, right? So if companies were better structured, they would probably have it in their bylaws or voting agreements, share agreements, that even if the price goes below the NAV, they're not going to sell the asset, because long term Bitcoin sort of like, rebounds and the company can survive short term volatility. But I do think there are going to be a bunch of these like cash grabs, like very hastily set up new companies. They just want to raise money and see a multiple, try to sell their shares out, and I think they wouldn't be structured well, and they would end up like forced selling. A lot of these companies wouldn't be able to differentiate in the market either, because Saylor showed something and he has differentiation just because of the size and volatility that the stock can provide. There are some other ones like Nakamoto, like they have such high sort of like outbound reach. Like there's a very big brand. They run the Bitcoin conference. They're sort of very visible. I think if you have differentiation and you can stand in the market, it's probably really good. The 21 company that's backing by Tether, like one of the most financially successful companies in the world, right? So I think if you are differentiated, you likely have a much better chance of success. But if you're just doing it for the short term and you're another copycat and there are 40 different ones, likely not all of them are going to survive, and I think we'll
Yeah.
see a bunch of them like go under.
Yeah. I think you could apply that analogy or thought process to a lot of things in crypto. There are a lot of copycats for sure. On the Bitcoin DeFi front, we've talked about this a bit, but I'm curious, when it comes to conversations you're having with developers, what do they want to build with Bitcoin? What are you seeing being built? Is it kind of aligned with what you would like to see? Or are people kind of going rogue and you're like, hey, this is interesting. We'll see how this plays out.
Yeah, I think I would say it's pretty aligned and pretty people get it pretty quickly, right? Like it's a little bit like we have seen products that have product market fit on Ethereum, Solana, and other places, and people very quickly get it that if there's a large lending market of ETH, why wouldn't there be a large lending market of Bitcoin, which is sort of like the alpha asset, the primary asset. So there's a very almost like a no-brainer that hey, let's go and build it. Same thing with stable coins. Like if you have a ETH-backed stable coin, why wouldn't you have a BTC-backed stable coin? Like if anything, that makes the most sense to have a Bitcoin-backed stable coin. Again, lending markets, like trading, like why wouldn't we do on-chain trading of BTC? Like, on-chain trading of Solana happens all the time. Of
So you think
coins
we'll start to see all these things come through?
yeah, so I think some of that it was very, very just logical and it makes sense. Even for NFTs, right? Like Ordinals took off because people are like, hey, my picture is saved on the Bitcoin chain forever. Like everything else might be dead, but Bitcoin is still going to survive, right?
Right.
That's if Bitcoin, God forbid, something happens to it, there's no rest of the industry, right? Like it's going to wipe out everything else as well. So people sort of get it that my NFTs are more valuable on Bitcoin. And then there are some new surprising things that people are doing where there are new types of financial instruments. In some ways, like even these old public market treasuries play, there are new types of financial instruments, but in TradFi. And so people are coming up with new types of financial instruments, but in DeFi with Bitcoin. That's what I view as the more cutting edge area, where people are coming up with very interesting new financial instruments using BTC, and that's something obviously like I'm an engineer, like that's what I would have envisioned that people will end up building, but people have their own skills and they come in and you give them the tools and let their imagination run wild.
Yeah. What are some of those financial tools that you're seeing being built? Do they already exist today, or they're fixing like
There's
previous?
some are in the pipeline, so I wouldn't be able to talk publicly about it. Like I
Sure.
don't want to steal their thunder when they launch.
Okay, fair enough. I thought you were gonna say something else, but no. Okay, fine. I guess we'll have to bring them on and hear their take on the financial tools there. When it comes to Bitcoin L2s, how do you think the infrastructure today can still be improved upon and made more accessible and productive so that it can compete with the other chains that are out there?
Yeah, so I think I would say the Solana style of saying that, like increase bandwidth and reduce
Right,
latency.
latency,
I
yep.
think that is just like such a good summary. I think that is something that any L1 or any L2 would just continuously need to do, because computer hardware is changing, right? Like your bandwidth is getting faster and faster. Like people just take it for granted, but now, in New York, like I have almost like a gig of bandwidth, right? And this was unimaginable, like even like 5 years ago or something. So I think when these things are changing, like the L1s and L2 will just keep getting faster. They will have to keep taking more and more traffic, especially like when we're onboarding. I think now we are in probably like, depends on the numbers you look at, but it's definitely tens of millions of users. In some aspect could be hundreds of millions, right? Like Binance claims to have more than 100 million users. Tether says it has more than 100 million users. So when these networks go from really hundreds of millions on chain all the time to crossing a billion, like these networks would have to sort of sustain that load. And I think in some ways it's an interesting engineering problem, but it's also somewhat straightforward. So I think that's something people would sort of like have to do, and we're this part of our roadmap. The other more interesting things is thinking of these networks where the primary user is actually not going to be a human, but it's going to be an AI bot, because they're
Hmm.
likely going to be more bots than humans that are trying to use these things. The same for the internet. I think the internet is massively changing, where if you look at just the traffic coming from ChatGPT to crawl the internet is massive now. And I wouldn't be surprised if other AI companies and the bots actually are the bulk of the internet traffic instead of humans, right? So
Why is that? Just because people are
volume.
putting in requests to them or what?
It's just because of volume, right? So if a lot of humans are going to ChatGPT and ChatGPT needs all the data, like they need to gather everything. So they're crawling the internet way more than any humans can, right? And these things don't sleep, right? They scale out in data centers. Like you're a human, you have to type a query and like go there and take an action.
Yeah,
Same,
they're handling like thousands to millions of
yeah,
queries, yeah.
same with blockchains, right? Like you do a transaction, you have to sign something, you have to take your hardware wallet. If you're an AI bot, you can clone yourself like 1,000 times over, and you're taking action. You don't sleep. You're just off, right? Like, so I think that traffic is likely going to dwarf everything else,
Mm.
and that's a very interesting engineering challenge to look at. Like, what would that traffic look like? Is it different from humans? How do we optimize for that traffic? What would the bots want to do, right? Like, we don't know. So I think those are some of the more interesting challenges when it comes to designing these networks.
You mentioned before Solana's kind of maybe motto or that we hear a lot is like increase bandwidth, reduce latency. What would you say is the motto or the slogan for Stacks and Bitcoin L2s?
I would say increase Bitcoin adoption and reduce the risks.
Fair enough. Okay.
So more
And
more more
yeah.
Bitcoin deployed, and it's safer.
Mm. When you think about adoption, I feel like that word's constantly tossed around. What does that really look like with the Bitcoin ecosystem?
Yeah, so I think with Bitcoin, this is another thing where I previous years I disagreed with a lot of the people in Ethereum and so on, where they were like, oh, Bitcoin people are just holding their Bitcoin, they're not really users. Well, they are users, right? Like one of the biggest use cases of Bitcoin is like preserving your wealth. And anyone who's actually preserving their wealth using Bitcoin, even if it's in a cold storage wallet somewhere, you don't have to use your Bitcoin on a daily basis to be a user. Like same thing with these nation states, right? Like they're not going to be active users. They're buying Bitcoin and holding it. So they're actually very, very important users of Bitcoin. So I think the way I think about Bitcoin is like that's the core use case. And then the next level is actually what we are focusing on, which is you make it productive, you can get a yield on that, because once you that analogy would be figuring out that you're not just holding land, but you can actually grow crops on it, or you can build a building and rent it out, so you don't have to sell your land. And I think people get that analogy that, hey, I don't want to sell my land, I want to get some earnings on it so that I can keep my property and I can live as well and be comfortable. So I think that's the phase we're going through, where Bitcoin where it will become realistic for people to just never sell their Bitcoin and just have a constant income stream attached to their holding. I think that's going to be a massive shift, because right now a lot of people still think about like oh, I'm gonna come in and buy Bitcoin and like make some profit and like exit. Like they still don't
Right.
understand this is not the asset where you make a profit and exit it. This is something you just, and I think Saylor understood it, and Saylor really is the guy who tried telling the world about it, like how to think about it. I think we are playing a role in making the land productive. People can grow
Mhm.
crops or build a home and like rent it out and stuff like that. That's going to be a massive shift, and it's going to bring in a lot of users. And I think then the next thing is a lot of these experiments that we are seeing happen in the rest of crypto. I'm not saying other chains are going to disappear or not. I think they're likely going to be around for different use cases. But a lot of the successful experiments will just happen with Bitcoin because it's the bigger market, right? It's a bigger market, it's a bigger network. So we'll see uh, all those users. Let's say, you know, I'll pick example. Like I think let's pick an example of something that actually happened, right? Like we saw NFTs, and then we saw ordinals, and ordinals are still there. They trade at a high volume, and they're around because Bitcoin is Bitcoin.
I think with the analogy you're making about land, and that's people who buy Bitcoin, and then there are people who then do things with their land. They could create a farm, they could build a house that's, makes it more valuable. How many people do you think are actually going to take their Bitcoin and put it to work and actually participate in this like DeFi economy opposed to just buying Bitcoin and holding it?
I think it's just going to become a lot more easier to do it, right? Like we're already talking about potentially banks holding offering custody for Bitcoin, and I think what's the thing that's going to be different here is what a lot of normal users don't realize is the savings rate that you get. Like I think it's like almost offensive. Like when I'm doing my taxes and I get those like,
Yeah.
oh, you earned 57 cents on this account and you still have to file taxes on it. Right. It's like I earned 57 cents. Like how? What rate are you giving me? Right. So those rates are like basis
That's
points.
a good point.
Right.
Yeah.
Whereas the banks are actually making money at like a 4 or 5% or more rate on your money. And they're not like it's offensive because they're not even giving you 10% of it. They're not even giving you 1% of it. They're giving you, it's almost like a slap in the face. I would
Yeah.
rather get a zero, and then at least I don't have the tax burden of collecting this and reporting it, the 7 cents I made. So I think people don't realize like how big of a thing that is, that it's your money and someone else actually makes the income on it. And with Bitcoin, once people start offering Bitcoin products, even in traditional banks, the issue right now is the banks have the lock-in. There's no alternative. You can't go to another bank that is offering you a better service because they're all plugged into the same sort of like banking infrastructure. And with Bitcoin, it's freedom, right? Like so, if some bank tries to do this where you hold your Bitcoin there and they're actually giving you like pennies or fractions of pennies, people are going to very quickly realize, wait, there are these other services. If I just keep my Bitcoin there, or even in self-custody, or if I'm more advanced, I can actually earn a much bigger yield. So I think that would just force the banks to actually offer better products. And mass market, I don't. I think this is similar to ETFs, right? Like some Bitcoiners might be against it. I'm actually for them because it meets the users where they are. If people are comfortable buying ETFs and buying Bitcoin through ETFs, do that. Some people are going to hold their Bitcoin in Bank of America. That's fine, right? They're still users and then they're helping in mass sort of adoption of these things. But it's going to be fundamentally better for the user because the underlying network is free and open. And you can't just rip off people because somebody else would build a better product because they can't. Right? In the traditional industry, they cannot.
Muneeb, you've been in this space for over a decade, which not many people can say. So obviously you've seen the evolution and the growth of Bitcoin and then, the whole crypto ecosystem. For Stacks specifically, what would you like to see accomplished in the near term? And then thinking more long term, maybe like 3 to 5 to even 10 years, what would you really like to see happen within the L2 space?
I think that's a great question. So I think short term, I would say Stacks is sort of evolving from a very technology first approach. Like it's also like a bunch of computer scientists, right? Like we have like a bunch of these PhDs from Princeton that got together and excited about the technology, and you get tracked like than similar engineers. So I think we've definitely been more tech first and focus on the technology. And now I think there's a very much like a evolution happening, and I'm very glad that it's happening, where we're switching to growth first, like traction first. And I don't know if you've seen this, but there is a SIP. So people from Ethereum, just like you have EIPs, Ethereum improvement proposals, we have Stacks
Right.
improvement proposals. So there's a massive SIP, which is one of the boldest moves that I've seen. Uh, as I mentioned, the Stacks never really had a large treasury. We never raised a lot of capital. And we are competing against projects that are sitting on like billions of dollars of treasuries, right? And as we're going into this growth phase, we have these tech breakthroughs. So Stacks is actually shifting gear and getting into growth mode and is trying to establish a large endowment. And I think short term, I think I am very excited to see that change. That yes, we have the roadmap, we know the opportunity, but we are switching into this different mode of operating with more resources, and we're going to act more like let's focus on growth and getting this technology to a lot of people, and I'm very excited about that. I think
The grow there.
that's like this year. That's like happening now, right? Like we'll have a on-chain vote, and there's a lot of support for it. I think it's likely going through. But long term, I feel that my sort of like, probably other than the Bitcoin reserve at Pakistan recently, I think my biggest contribution to Bitcoin is the L2. Like if it can be the default L2, where billions of people are actually using their Bitcoin, like payments, especially if it's self-custodial and faster and cheaper, right? Why would you do all the payments on the L2 versus on the L1? Why wouldn't you deploy all of the capital here if it's very secure? So I think if we become the adoption layer of Bitcoin, like I think that's very personally satisfying to me that, there was this technology, it started, and, the original founder disappeared, but we sort of like took it to the next level. Like I think, and actually brought it to billions of users. Like I think that's something very personally satisfying to me.
Yeah, 100%. Muneeb, last thing, can you leave us with a piece of advice, something that you've carried with you throughout your time in this space?
Yeah, I think when you said that you survived more than 10 years in the market, I've seen so many people blow up. Like there are people who had so much Bitcoin, all they had to do was like not blow up, and their 10 generations would have been fine. And I think there's something to be said about um, knowing your limitations as well, and staying humble and learning. Like this is something I've noticed is every couple of years I sort of like reset. Like I'm like, just because I was there early on doesn't mean I know more than the new people. If anything, it could hold me back because I might have old mental models that are no longer relevant. Doesn't mean I forget everything, right? Doesn't mean I forget what happened and forget the learnings, but I have to like sit down and think from first principles again, right? And be relevant to what's happening today. And I think that is other than like, being having a mindset where you just don't blow up. Like don't try to do something beyond what's natural. Like sometimes people get the high of success, right? Like they're like we're gonna do X and Y and take needless risk and take leverage, do this, do that. They've especially in a bull market, you feel like invincible. Like, hey, I can raise as much capital as I want. I can go and do this and that. And I think just keeping your sort of like feet on the ground and staying humble and thinking long term and then reevaluating and relearning, like I think it goes a long way.
Yeah, I love that. Amazing. Muneeb, thank you so much for coming on today.
Absolutely, this was great. Thank you so much.
Thanks.